always be in line. You made this mess and left me with the pieces. Now I wanna burn all the bridges between us. I can't focus, I can't forget. I've been thinking too much lately. I just need to clear my head. I just need to clear my head. I've been stuck on memory, but it's not like I need it. And you may have some history, but we don't have to repeat it. You made this mess and left me with the pieces. Now I'm gonna burn all the bridges between us. I can't focus, I can't forget. I've been thinking too much lately. I just need to clear my head. 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 I just need to.
That's no.
I just need to clear my head. I just need to. I just need to clear my head. I just need to. I just need to clear my head. I can't focus, I can't forget. I've been
All right, let's go ahead and get started here. Good morning. This is a microphone check. Let me know how my microphone is sounding. Microphone check, 1, 2. Awesome. Thanks, guys. So, sorry I wasn't here on Friday, but as you can see, I went on a mini vacation. Took 4 days off. Went to Gili Trawangan, also known as Gili Tea. And yeah, had a really good time. Did some shrooms, some psychedelic mushrooms. Learned a little bit more about the universe. Got to hang out with some friends. And yeah, that's what we're here to do, right? We're here to invest, we're here to trade. We're here to learn and make money and free up our time. That's the key to investing, is freeing up your time. It's not just about making more money or making money off your money. It's about freeing up your time and freeing up your life. All right, so let's jump out of this video here. I was going to have it play some segments inside of the slideshow that we got going on, but I just couldn't get it to work. Biggest company in the world, not the biggest, but probably the most powerful or most advanced company, Google, and they still can't get videos to work in slideshows very well. Anyway, so if you're tuning in, we are talking about the wheel strategy, learning the trade with options. Everyone I see in the chat has been here before, so I'm not sure if we even need to go over the wheel strategy today. Maybe we can talk about some finer points, but let me know in the chat room if you need or want me to go over the wheel strategy today, or if you want me to skip it. Just want to say today's topic is don't be a slave. We'll talk about that in a second here. I want to remind you down in the description, we do have a couple important links. Number one is our tip jars. If you want to donate, if our channel helps you make money, then go ahead and give us a tip. We appreciate that. Anywhere between 5 and 20%. And I mean, you do what you got to do. Do what you need to do. We will be giving out some Discord invites for those that stick with us through the program. I do recommend that you join that and communicate with your fellow traders, and I do give out some of my trades inside the Discord. Also want to remind you that if you don't use Tastyworks, if you need a broker, check out Tastyworks. We've got a referral program for them. Guy says that we should skip the wheel section of this program. We usually go over that in the first half hour. If there's anybody that's joining us that doesn't know what the wheel is or wants me to teach the wheel, go ahead and give me a message in the chat room. Otherwise, I'm going to talk more about other stuff. Let's see. Rashid says, happy to skip, but I rarely hear you talk about stops. I would be keen to understand when you use stops on your trades. Sure, Rashid. That's an easy question for me to answer. I don't actually use stop losses. I know that goes against what they teach you. Especially what day traders do. And I think if you actually, well, I will say this, if you were day trading, then stop loss are an important part to the day trading methodology. There could be situations where I might want to use a stop loss if I don't fully believe in a company, or if I got to sign the shares and then maybe they're facing an earnings report or something interesting like that. So I'm not saying that I'm against stop losses. It's not a regular part of my strategy. for various reasons. I mean, we're dealing with, when you're doing the wheel, you have to find stocks with volatility in order to get the premiums that you want to get. In order to do that, so the prices, naturally the price is going to swing up and down. So if you put your stop losses too close, then actually what you're doing is you're putting in a loss lock. You're putting in a loss lock. You're going to lock in those losses if it comes down and hits it. I guess the final thing is that I'm really trading in companies that I believe in long term. And long term could be 6 months, a year, 5 years, right? But there's some amount of time. And the idea is that I don't really care where the price goes this week, today, tomorrow, etc. That I believe the price is going to go up over time. And more often than not, that tends to be true. I do have a couple big losers though. There was one company out of the UK. There's a finance company, a bank company, which is another reason I don't do finance companies anymore. That went below $1 and then got delisted. So that stock is about useless. So anyway, that answers your question, Rashid. How often do I use stop losses? I don't. If I was going to use them, I guess could be another question. If I was going to use stop losses, I'd want to look at some trading ranges. Here, let's just jump out of this then. If anybody wants me to go over the wheel strategy, I'm happy to do so, but it looks like we've got regulars only on the channel today. So I'm going to skip it unless anybody asks for it. So let's go take a look at Walmine and maybe give an example of when I might use a stop loss. Let's just use our typical example, SPCE, Virgin Galactic, Richard Branson's baby child. So here we can see the chart pattern for Virgin Galactic. Let's just go ahead and zoom in a little bit to the 3 months. 6 months, okay. I guess if you're going to use a stop loss here, first of all, you want to figure out where you're putting your trade in, where you're going to get assigned. Say it's trading at today's price at 22. Maybe you sell the puts at 17, 18 to get a decent return. Then you get assigned. Where would you be comfortable about having that stop loss after assignment? Would you want it to be in the 13s, the 10s? Maybe you come a bit out here. I don't know. Really comes down to, I was going to say go to a previous trading range, but this is really the trading range that we're seeing for space. So this turned out to be kind of a horrible example. Oh, what could be another good example? Let's do Riot. Riot would be another high volatile company that we make trades on all the time. And right here, we're right at the bottom of the, what is a normal trading range for them ever since February. Well, I guess it's not too long. All right, but if you're going to put in their stop losses here, so let's zoom in. Good morning, Wayne. Happy to see you here. I know you know the wheel strategy, so I guess we're going to skip it this morning. You missed the awesome video footage of my trip, so you maybe watched it on the replay. No, I'm kidding. It's just clips. But Rashid was asking, let me see, we'll go back. I rarely hear you talk about stops. I would be keen to understand when you use stops on your trades, and I didn't see his follow-up. Fair enough. What a good example to use space. I am down on this, having removed my stops in error. Yes, I didn't use space as the example. It turned out to not be a great example. But I would be looking for the previous trading range, right? So here we are with Riot Blockchain, currently trading at 41.48. If you sold, I don't know, the $38, $35 puts, then you're going to get assigned. Your break-even is going to be a couple dollars less than that, hopefully. So then you might end up in the 36 range. But you know that looking at this, if it goes below 27, 25, it could come down a lot. And certainly if it goes below the 23. So maybe here you put a stop loss at 23, because if it's going to go below that, or maybe you put it just below that, it's all right. So 23 is sort of that number that you're afraid of. Maybe you put it in at 22.75 or 22.50, because if it breaks through that, then probably going down to a new trading range. But again, I just want to clarify, I'm not telling you to do that, I'm not recommending that, and I don't do it myself. You know, I would definitely do it on a case-by-case basis on how I feel about the company, and typically I don't care, because I'm only trying to wheel on companies that I don't mind holding for 6 to 12 months. And so if the price goes down, then I'm still selling puts, I'm still selling calls, or if it's too far out of the money, then I'm just going to hold and wait for it to go back up. That is what we call dead capital across the industries. Dead capital to sit there and not be trading, waiting for something to go up in value, not be making money from it. Not always the happiest or best way to use your money, but sometimes you do what you got to do. Okay, so we're going to skip the wheel, but I still want to cover today's hot topic, which is don't be a slave. I don't have too many slides to go with that since we're going to be skipping this. Hey, hold on. Let me let my puppy in. My puppy's banging on the door. Come on, guys. I'll just let the video play while we talking about don't being a slave, because that's actually pretty relevant to this. You know, my friends decided to go to Gili Trawangan here in Indonesia over the weekend, and they were leaving on Friday, and tourism is down. It's really slow. Thanks for the question, Guy. We'll get to that in a second. I do want to cover my topic about not being a slave. All right. So anyway, my friends are going to go on Friday, and there's no boats on Saturday or Sunday because tourism is down. A lot of the boats have stopped or reduced their hours. And if I was a day trader, or if I was a workaholic or a wage slave, then I might have had to say no to going on this trip. But because I've set myself up in a position to use strategies like the wheel to only work when I want to work, all right, then I have the opportunity, and so I took the opportunity. And then, unfortunately, that's why I wasn't able to host with you guys on Friday. Might have been able to do it from the island, but we were just too busy, so it just didn't line up that way. But none the worse, right? My plays still keep making money. My strategy still keeps making money while I'm on the trip. I could have put on some trades for my phone. I ended up not putting on any trades. But that's what this is about, you know, and it's not just about, you know, I hope all of us get there, basically. It's about not being a slave so that you can go and enjoy vacations like this anytime. If you guys want, if your friends say, hey, let's go here tomorrow, you don't got to talk to a boss or talk to somebody else to get permission. You just get up and you go if that's what you want to do. Because at the end of the day, we only have one life that we know of. For sure, you know, hopefully there's more lives, but you got to take advantage of every day that you're being given. Doesn't mean that you party all the time, but don't lock yourself into being a slave, which is what I don't like about being the day trader. Day traders make money with their time, and they have to be glued to the screen 8, 10, 12 hours a day because there's pre-market, market, and aftermarket to be trading on, and their trades can go anyway. Hey, puppy, be quiet. Okay. So I don't recommend day trading. In fact, I think day trading is actually a big scam. I think a lot of people are out there selling people the dream of day trading, of getting rich quickly, and whether they say it that way or not, that's what people kind of get away from that, or get from that. And day trading is a skill. I'm not going to say that it's not a good way to make money, but it's a skill. It's like telling everybody, hey, you should quit your job and be basketball players. You get millions playing basketball. Well, the reality is that's not the case for the majority of the people. It's a skill that you have to hone. You also, I think, have to have a certain, personality or mindset for it, you know. I mean, you look at the major basketball players, right? Do they have some physical differences and some mental differences than most people that make them more successful? Of course. Well, it's the same way that it goes with day trading. You know, day trading is going to benefit certain peoples and certain personalities. And some people just get really addicted to the numbers. They get addicted to taking risks. They don't follow the rules and strategies that you're supposed to. As they start to lose, they don't go look for another play. They try and win it back in the same place. It's basically the same patterns that we see with gambling addiction and casinos and slot machines and stuff like that. People feel like they got to make their money back in the same place that they lost it. But anyway, puppy. Quiet. Sorry about that. So I don't recommend it, and I think it's a big scam. I think there's too many people talking about it. It's too easy to get sucked into it. One of the great things about using the wheel strategy, and hello to the people that's joined. I now see that we got 7 people. We were going to talk about the wheel strategy, but everyone on here so far already knows the wheel strategy, so we're talking about other stuff. But if you want me to talk about the wheel strategy, let me know in the chat. We'll try and accommodate everyone that's in here, okay? So day trading is a ton of work, and here's the other kicker that I didn't really touch on. Okay, if you're a day trader, you're going to be trading a lot of hours every day, and you're going to be using your own money to do it, which means that you're now in a risk-reward situation with your money, and it rewards you if you do a really good job. Okay, but I'm going to propose a different idea. What if instead of doing that, you use a trading method that had high probability? Okay, you had an 80% chance with every trade that you put on to make money, and you only had to do it a couple hours a week or an hour a day. And you take that other time that you would have spent day trading and you actually go work for another human being. And then you go do something. And of course you do the highest value thing that you can do. I'll tell you what you can do. You can sell boats, you can sell planes, you can sell cars, you can sell houses. You've got all this other time that you could spend doing it. This is high value stuff that will always be in need. People always need their stuff to be sold. And then you're not taking on your risk. Does that make sense? It's their assets that's at risk. It's their assets that they're selling. Okay? And the longer it takes to sell, the more money that they're losing, not the money that you're losing. Right? So you remove your loss from the equation. You do high probability, low time investments with your own money. And you do high time, low probabilities with other people's money, other people's assets. And that's what I don't get about day traders. I'll give you an example. I met a smart but, young man in Thailand who is working really hard to try and day trade to make $50 a day, because that's what he calculated that he needed to live on in Thailand. $50 a day would pay for his rent, his food, his entertainment, and even maybe a little bit of cushion money, okay? It's really cheap to live elsewhere. Which is another thing I want to talk about with the Don't Be a Slave section, since nobody's asking me to talk about the wheel today, okay? Is that if you go overseas and you find a place with a good exchange rate to whatever you're used to making money, you can live much cheaper and much nicer. So this young man was trying to make $50 a day, but he was spending his entire time day trading, which means that he's risking his capital. And it was working. It was a bull market, so it was working, but it also meant that every single day, whether he made money or not, he was taking $50 out of his trading account, swiping it at the ATM to pay for his bills. Well, what happens when it doesn't work for a couple days? What happens when there's a down day? What happens when the bull market's over? Well, suddenly that $50 is going to come out of his account and it's not being filled back up with $50. So guess what? Now his buying power goes down. So guess what? It's going to be harder for him to make $50 a day. So he's on this negative trajectory. Here's the other problem I had with him. I mean, this is more particular to him, but it can be particular to you as well. Think about this. He's trying to make $50 a day trading. Well, I told him that's silly. Why don't you teach English online, make $10, $15, $20 an hour, no risk, do that 4 hours a day, take the $50 out to pay for what you need, and put the rest into your trading account, build up your trading account, and make more money. You get what I'm saying, guys? It literally does not make sense. You can take most of these day traders and say, okay, instead of doing that, why don't you use a wheel strategy or something else with high probability that takes less time, and then go work. Just actually work for another human being. Sell cars, boats, planes, learn a skill, do a trade, do art if you love art, do welding if you love working with your hands, and take that excess money, right, use that to live on, and just constantly plug in your excess money into your trading account, rather than making your trading account your whole lifestyle and your whole way of making money. Anyway, that's the idea with Don't Be a Slave. And what I don't get about day traders, right? Even if they're making six figures, even if the day trader is making 6 figures a year, that guy is probably really smart if he's successful at day trading. Couldn't he make 6 figures a year not day trading? Couldn't he make 6 figures a year in corporate sales, pharmaceutical sales, high-end machinery, 3D printing sales? Couldn't he make $100,000 a year and use a low time variant to invest and trade and make money, right? And then he's constantly pumping his trading account with that excess money, and he's not risking his money in the way that he makes his money. Anyway, Be very conscious of the amount of time that you're putting into something and whether or not you're buying yourself a job, because that's what day trading is. It's not investing. That I have a very, and this is the guy that teaches you that, right? That's why he's on this slide. When you're a day trader, you are not in the I quadrant. You are not an investor under Kiyosaki in dictionary. You are an S. You are self-employed, which also to me, everything on the left stands for slave. S stands for slave. Okay, you've bought yourself a job. When you're a day trader, you've bought yourself a job. When you're an investor, you should be doing low time, high return, and you should having your money work for you, not you constantly working for your money. So you have to pay attention to your time investment. Now you say, Bud, you're doing this show and you're probably researching and doing all this other stuff. You're right. I'm trying to build a business out of this. I'm trying to help other people get rich as well as getting rich myself. Yep. And I want to build this to the point where it does sort of manage and take over itself. But it takes time to build that up. If I wanted to, if I was happy with the amount of money that I have, then I could totally just go straight to the I quadrant, just wheel, live here in Indonesia, in Bali, in Thailand. I could travel. I could still do everything that I normally would do, okay? And I wouldn't have to work maybe 5 hours a week, which is low enough to be in the I quadrant. You'll never get to zero. I mean, you could, I guess, but it'd be really hard to get to absolute zero, okay? But also I have other bigger ambitions. I want to promote life extension. I want us all to live forever. I think we are getting close to the science that can rejuvenate the body and keep extending us till we get to an escape velocity, as Aubrey de Grey talks about. And if I'm going to make sure that we get there, I can't just sit back and let my money work for me and just live cheap. I got to try and drive this harder, bigger, faster. So let's go back to the comments here. I know you guys have given me some good comments to respond to, but I wanted to finish my little diatribe there. So let me take a look at the comments. Rashid says, I'm not really a day trader. I monitor the technicals to analyze stocks of interest. Once I am confident on direction, I buy calls or puts. Buying them, okay? I want to move away from this and focus more on the wheel. That's great. We're all in our different positions. I'm not big on buying and I'm not big on buying calls and puts. I'm more on obviously selling the calls and puts. Better time value. You put time on your side and you create tri-directional trades. So if it goes up, down, or sideways, you make money. You don't get that when you do directional trades, such as buying the calls and puts. I'm sure you know Rashid is on his path. It's great. Wayne Bicknell says, why would I want to work for anyone else? I make more than enough than I need without working. And when I say working for somebody else, I mean you're doing something for humanity, okay? That I do agree with. Day trading is a job. Yes, exactly. Day trading is a job, and that's the point. You know. And Wayne, also, you've put in the time. I know you. I know a little bit about you personally. I know that you're at that point where you don't have to. You've definitely put in your time for society, so that for sure. But I get just want to clarify. He says, why would I want to work for anyone else? I make more than enough without working, and that's the great point. But you're not day trading, right? You're not spending 8, 10, 12 hours a day in front of the computer, right? Because to me, that's work. That's not investing. If you're spending 12 hours a day, you are working, and you're working really hard. And that's the difference that I just want to get across. Some people call themselves investors because they're investing, and their clarification of investing is that they put money in at risk to get more money out. All right. Guy Raderez says, it's a matter of where you are in life and personal preferences. Absolutely. And like I said, some people, you know what? If you just love trading and you want to trade all day, every day, then yeah, you know. But let's not call ourselves investors if we do that. Let's call ourselves day traders, and in the S quadrant, self-employed. Let's just make sure that, you know, it's one of the problems with English is we have one word means 20 different things. But people have this idea that, anyway, I just don't want people to go down the wrong path of thinking that that's the goal of being an investor, is to risk money to make money. Anyway, we had a stock pick today. Whereas the goal, to clarify for anyone that's tuning in, an investor should be lowering his time involvement. It should be about getting your time down so that you're making the maximum amount of money for the least amount of time possible, and while being safe about it. All right, RBLX, we have a stock to go look at. Let's go take a look at it. That is an interesting chart pattern. Wow, this is the most... Oh, okay, this is... I don't think you mean the RBLX cryptocurrency. I wish Wallmine would default to stocks and not cryptocurrencies. I don't know who uses Wallmine for cryptocurrency charts. Oh, these guys have been out only for a month. All right. So let's see. We got March 10th. Today is April 26th. So they've been out for a month and 16 days, currently trading at 71.78. We see that they opened at 64. Let's pretend that this day doesn't even exist here, and let's just see what they do after that. They went up to 75, 76, then they had a big drop, then to 66. They recovered a little bit, but then not much. It was just you call this a small dead cat bounce, or just, failed to break up again. All right, it's down to 71, 62. It actually touched, what did it touch? It touched 60 here, and then it bounced all the way back up to 69 at some point, and the close at 67. Just getting an idea for this. And now it's on an upwards trajectory. So anyway, that was just an interesting chart in the amount of time. Normally we don't spend too much time on that. Anyway, institutional ownership is very high. Institutional plus insider puts you at 68%, almost 70% of smart people working very hard for you to make money that want to see the company succeed in the long term. Revenue is almost $1 billion. Market cap is 40 billion, so we got a 40-to-1 revenue versus market cap. Let's scroll down. It's going to be hard because we don't have any quarters to go off of. One quarter is not very indicative of anything. But they're losing $50 million a month. They have $900 million in cash on hand, so that's almost 10 quarters that they could survive. 893 divided by 50. Oh, did I do that wrong? Oh, no. Yeah, I did that way wrong. 17.8 quarters to survive if they don't lose more money than 50 million. Again, this is almost irrelevant because we only have 1 quarter of data to go off of. Whoa, debt to liabilities is super high. What was that, 99%? 1847, 94% debt to assets. That is not great. Deferred revenue. Total current liabilities. Non-current. Assets. Goodwill and intangibles is 100 million. Anyway, let's see what this company does. I mean, I certainly wouldn't wheel this. I'm sure Guy's looking for a different play on this. Guy, what's your play on this? I know you're not wheeling this. You got a diagonal spread you're putting on? Guy might not want to tell me. He's mad at me. No. I was looking for some profile information on Roblox. Just my brain doesn't work to remember what it is right now. Oh, are these the guys that make that, those, yeah. What's their most famous game? Excuse me. What is their most famous game? Is it just one game and they got a bunch of games in that game? It's like a digital community, digital world thing. Guy says, no play yet. I just know this company, very promising. Yeah. They were the ones that were doing something with the kids, and the kids are loving it. And then, I mean, actually like little kids, and they've really dominated the market and taken off. It's almost like a sim life for kids, if I remember right. Yeah, I mean, you're going to know more about this company than me, even though I'm a game designer. People may not know that about me, but I design video games. I've worked for a few companies in the past. I've worked mostly on mobile games, nothing that I want to talk about. I am currently working on our own game that ties back into promoting life extension. It's kind of a sub-theme for the game. so that people become aware of it as they're playing the game. Okay, so Roblox's big thing is that they let people use WYSIWYG coding to let people develop and share their own games without any coding. WYSIWYG is what you see is what you get. A lot of drag and drop UI, stuff like that. I'm just taking a look at what this article is saying. No, I mean, I'll tell you one thing, is that they're basically, rather than thinking of them as a game company, they're sort of a platform company, right? Because what they've created is an engine that lets other people create the games. So it's almost like being an Apple app store where other people make the apps and then sell it through them. Roblox is saying, hey, we can't make millions of games, but we can make the tools to let tons of amateurs make millions of games and make money off of the games that other people do. So that's going to be huge and promising. As long as they stay relevant, as long as they stay on top of it, as long as the artwork kind of stays in vogue or in style. It is a 3D style. It looks like they're going very cartoony with it. That actually has a longer lifespan because they're not approaching, what's the word? Realism in the uncanny valley. And so people will stick with this cartoon style longer. The question is the medium term, right? Like, let's say that Roblox has been really profitable for a few years and then they IPO probably at their peak or what they think could be a peak. Are they going to go down or up in just... Basically, are you buying a peak or are you buying a valley? Because all games have an up and down trajectory. They wax and wane. And I'm not saying I know what this is doing. I'm just saying you need to figure that out and make sure that you're getting in at a decent price and that they're not on the downtrend in the near future. You could have an amazing game and then just, 6 months later, for whatever reason, you're just out of vogue for not like you did anything wrong, not like you even failed to add new content or anything. It's just new game, new content comes out and people get bored for whatever reason. That's always the risk of the entire entertainment industry. Happens to everyone that's in music, in art, in video games. So it'd be nice to know what they had in their pipeline, what backup products they have. Are they going to buy up other companies? Their debt to income ratio looks super high, so you'd want to figure out what is all this deferred revenue and how are they counting this? I mean, this is the big question that I'd want to answer, is just the accounting. And if you figure that out, then that's going to help steer your direction on when to get in. Anyway, that's what I've got. Hey, let's, if anybody's got any other stock ideas, let me open up my scanner. I actually forgot to open up a bunch of things today. I wasn't sure how active I'm going to be. I'm feeling good now, but I just had some tea. I was super tired. Today was my trip back. Got sunburned on the boat, sitting on the top the entire time. It was beautiful. You saw the videos there today. But that much time in the sun, plus all the travel hassle, being on vans and boats and all that good stuff after a 4-day weekend made me feel a bit tired. I got a few hours to just chill and relax before having to do the show. Or not having to do it, I can do whatever I want. I'm an investor, yeah. But I wanted to put on a show, especially for you guys, because we didn't do one on Friday. MO Altria Group. I'm going to take a look at my scanner and then come back to MO to see if there's anything new in my scanner. MVIS showed up. Somebody was talking about that over the weekend. You can do this. MVIS, by the way, shot up like $5 on Friday. On a $10 stock, that's a lot. All right, that's a 50% move, basically. Anyway, so they're at $18 currently. I haven't checked the pre-market price. This is not a live scanner. This is a last night scanner, yesterday scanner. Okay, so $18 is currently trading price, not pre-market. So I should say last closing price. You could sell the $13 put for $1.30. That's obviously a 10% gain, 25 days, 135% APR. I really know nothing about this company. Let's take a look at it. There's 4 other plays that my scanner is recommending, recommending on this company. They make electronic components. This is what I remember, is they make LiDAR. And LiDAR is overhyped for all the EV electronic vehicle companies that might use LiDAR. But I'm a really big fan on Tesla. I've watched over 200, maybe 300 hours of Tesla videos and people who dissect Tesla and talk about Tesla. Mr. Elon Musk has said multiple times that LiDAR is not important. He's not going to use it on their cars. If you solve... I mean, they've tried it. They've tested it. It's not like he's just saying whatever about it. Yeah, it's a crazy chart. That is an... okay. Oh, Guy points out this is the ugliest chart in the world here. They shot up to $480 in 2000, whatever this is. It's hard to see. Oh, May 2000, they were at crazy prices, and then they went to nothing. Jesus, that is ugly. Okay, anyway. So anyway, I think this company, without looking too much into it, I'm going to guess is overhyped on LiDAR. Before I would make any trade on this company, I would want to find out how much of their income, how much of their revenue is coming from non-LiDAR components. And even with that, if the company's hyped on LiDAR, even if they have good money and good income from another sector in their company, as soon as people realize or think that LiDAR sucks, then this company is going to get tanked, even if LiDAR is only a minority thing in their company. That was super messy what I just said, okay? Let me say it again. If people are hyped on this stock because of LiDAR, even if the company doesn't rely on LiDAR to pay the bills, it doesn't matter, because as soon as people find out that LiDAR is not the cat's pajamas on electronic vehicles, the company stock is going to tank because they were hyped on LiDAR, right? So whatever they get hyped on, if that goes south, their valuation is going to go south. Now, that being said, they spend $3.5 million a quarter. They have 17 million in the bank in cash on hand. They could survive 5 quarters without any real revenue or income. So that's safe in terms of accounting. They've got 12 million in debt versus 21 million total assets. So they're at 57%, which is not fantastic. It'd be nice if they were under 50. But 70% is my cutoff, so they're 13% away. Because I figure most banks will loan out up to 70% on them. And what was I looking for? Goodwill and intangibles. I like this. They show very little goodwill and intangible assets, so that means that you can trust the balance sheet. If their total assets is 21 million and 10 million came from intangibles, I'd have to start discounting that, because you figure some of that is inflated, whether it's brand or just patents that aren't actually worth that much. But they don't show any real value in terms of their balance sheet. So you can basically count that as real money, is 21 million in assets. This is 21 million in assets. This is a micro company. Market cap of 2 billion, and they only have 21 million in assets total. Yeah, I definitely wouldn't touch this with the wheel. And I will say this, right? With that super big pop today, probably not going to be cheap. But if you could afford to buy a straddle that was decent, this could be a straddle play. Or you could just not do a play. You can just not do a play on this company and just go find one of 9,000 other companies to do. That's always my big answer, is why have a tool for every company? Why not be really good with a couple tools and just go find companies that fit that tool? I don't like these people that go online or have these videos where every single company, they come up with a play or some strategy they're going to use on this company, and they're just constantly putting on 100 trades. You go, oh, well, that guy must be really good. Is he? I'm not sure. Why not be really good at a couple and just go find, be really good at a couple tools or a couple strategies, and go find the companies that match that out of the 9,000 that are out there, rather than doing the spaghetti stuff. Anyway, So I'm going to be done with MVIS. I'm not going to put it on the wheel. Okay. Did we look at MO or did I skip MO? As I was looking at MVIS. I think we skipped it. Altria Group, they're in a tobacco. Tobacco's always going to stay strong. People don't stop smoking tobacco. People will give up heroin before they stop smoking tobacco. True story. Not my story, but you know, other people's story. This guy had a lot of hats. Senior VP, Chief of HR, and CCO. Running half the company, sold $40. Sold his shares at $40 a piece in November. Only $471,000. He was just buying a boat. So there's no really big sales. Market cap is $90 billion. Revenue is $26 billion. Quarter over quarter, they're growing at 5% in revenue. Institutional ownership is 63%. ROCE is 21%. PE is 19 for those of you that love PE. Oh, geez, these numbers so high compared to what we were just looking at. 1.9 billion in profit per quarter. They lost money in September 2020 earnings call. Not only were they not up 2 billion, but they were down $1 billion. So that's a $3 billion swing in September. Kind of curious to what that might be. If you want to trade this, you might want to look that up. By the way, we got 19 minutes before the bell. Cash on hand versus income doesn't really matter because they're so super positive. So we're not worried about them running out of cash. Intangibles are a bit high on the valuation. They got $18 billion worth of intangibles in a tobacco company. That's total assets of $47 billion. I'd want to know what that's going on, if it's just brand value. If it's just brand value, I'd cut that in half. Brand values are tobacco brands are constantly being attacked. And I'd be curious to see. This seems inflated without doing any research, so I'd want to do some research there. So let's just imagine instead that this is 10 billion. So we shave off 7 billion in their total assets, you get 40 billion. Now your total liabilities are 44 to 40. That's not sexy. And that just means, whoa. Where'd my screen there? There we go. Okay. So to me, they're over leveraged. All my windows just dropped out of the sky. Hold on here. All right, cool. We're still there. We're still alive. Great. I mean, tobacco's not going anywhere. It's a big freaking company. They're obviously going to be able to restructure and do whatever. But that debt is worrisome as a shareholder because how are they going to restructure? How are they going to take on debt? How are they going to, how are they going to operate? What's going to happen? Are they going to issue shares? Are they going to dilute? Are they going to spin off assets? So the two things that worry me about this company is the liabilities versus asset. Let's do one more thing before we write this off. Let's go look at Yahoo to make sure that the numbers match, because sometimes the numbers on Yahoo and Wellmine do not match. All right, MO. Financials. Balance sheet. Total assets, 47, still the same there. Total debt. Okay, so we have a debt discrepancy between the two websites. Total debt on Yahoo says 29 versus the other one said 44. So we were missing 14, 15 somewhere. Tangible book value, working capital, net tangible assets. So something's being counted different between the two websites. All right, but what is this debt? Let's assume then that Yahoo is right. So 24.5 divided by, we'll do the whole value, 47. If you count their intangibles as they describe it, then you're at 52% debt ratio. But if we discount the intangibles like we think we should, what do we get? We get total debt, net debt. I did net debt instead of total debt. 29.471. divided by 47.414. That gives us 62% debt ratio. Okay. Let's pretend instead that their intangible is only worth half as much as they say it is. We're going to take 29,471 and divide it by 40,414. So subtracting 7. And now you're at 73% debt ratio. So that's higher than what I like. It wouldn't be a game changer for me. I mean, it should be for a lot of companies, but for tobacco, you can almost just ignore it. It's not like the banks are going to stop lending money for tobacco companies anytime soon. What do we want to look at? The options here. Today is April 26th, so we're going to look at May 28th. We're going to look at at the money, puts. $1.35 on the 47. You can only get 3% at the money, which means you're definitely not going to get 5% out of the money, so it's not going to fit my strategy and my goals. But let's just see 47, 45. You can get 75 cents at the 45.70. Whoops. Come on, calculator, clear. 75 cents at the 45. You get a 1.5, 1 2/3 return, percentage return in 30 days on the 45. Give you a break-even price of 42.75. Sorry, 40. Did I do that right? No, 44.25. Excuse me, 44.25. Divided by today's trading range of 47.39. So you'd get a break even that's almost 7% cheaper. You'd be getting 1.6%. And if you ever got assigned, you'd own it at 7% cheaper than today's price on a blue chip. That's not terrible. And if you were selling calls, if you were assigned at the money, you get $1.50 divided by 47.55. You'd be getting 3% at the money selling the calls. So you're getting a lot more selling the calls at the money, but then you could lose your shares. Let's look at $1. Yeah, let's just do $1.08. $1.08 at the 48.50. That gives you 2%, 2.25% monthly return, and then your max appreciation would be at 49.22. So you can make $2 a share, or you'd make $1 a share. So you can just figure out where you want to be on that. Yeah, I mean, if you were being super safe on an IRA play, right? If your goal was 1.5, if your goal was 1 or 2% a month, then this is probably a good company. They probably have dividends since they're a tobacco company, right? Holy smoke, 7% on the current value of their dividends. Yeah, I like this company. That's a good one. Wayne Bicknell, that is a great company for, what do we want to call that? For your triple income strategy, right? So the wheel, for those that don't know, there's another part of the wheel. There's another, what do you want to call it? Niche, variant. There's a variant to the wheel called triple income, which is basically wheeling only on companies that pay dividends. Okay, that's really when somebody says they're using a triple income strategy or wheeling triple income. What they mean is that they're only doing the wheel on income generating companies. Sorry, dividend generating companies. And ideally, the way to set that up is to sell puts that will expire before the what's called ex-dividend date. So before the date that you have to own the shares in order to get their dividends. So you load up on puts. And so if it gets put to you, you take possession of the shares, you wait, no, you don't wait, you take possession of the shares, and then you sell a call, but you make sure that the call expiration date is past the dividend collection date, okay? And you just have to go look those up and figure out when those are. Usually if you go a month out, you're fine anyway, and you collect good ROI on your selling your call anyway. And this way you get the premium for selling the put And if you get the shares, then you collect the dividends, and then you also collect the premium for selling the call. And hopefully one of two things happen. You either make good money on the premium and the dividends, and you keep the shares, or you make good money and you lose the shares, and then you go do it again. You go find another company, or you wait for this company to do dividends again. So for a triple income strategy on blue chip style companies, this is probably one of the best I've ever seen. That's a fantastic find. Guy says, I would do it on a stock like MET. Let's take a look at MET. Gosh, Walmart, I really wish you would default to stocks instead of crypto. That's just silly, if you ask me. You guys take a look at that for a second. I have to do something on my other screen. Oh, MetLife, of course. I was wondering what the stock symbol stood for. Yep, insurance companies. Always a good one for blue chip traders. All right. Anyway, I want to go back to that MO. We've only got a few minutes before the market opens. What do we say? We were looking at the May 28th. Actually, when was the dividend? I have to do that correctly. If I chose May 28th, ex-dividend date is March 23rd. No, that was the old one. March, not April, not May. When are their next dividends? So their dividends aren't coming out for a while. Is that right, Mr. Wayne? This company's not going to pay dividends for a few months. All right, so let's take a look at MET. Nothing but up on the MET. They haven't had a pullback since March, and that was a tiny, tiny pullback. They had bigger pullbacks in February. Okay, they've had recent pullbacks, but they've kind of skewed up. They've gone up from 55 to 62 without a pullback. I kind of feel like there'd be a pullback coming. Insider institutional ownership 77 plus 15, 93. So there's only 7% float. Revenue's up 13% quarter over quarter on an insurance company. That's great. That's good growth for a big insurance company. PE is only 11. For those of you that think PE means cheaper is better, that's a good price. Wow, their income quarter over quarter is all over the chart. We got $4 billion in March 2020, then $68 million in June, $633 million in September, $124 million in December. So I mean, they're always positive. That's great, even with the COVID. But they are just all over the map on that year. Normally, they make $5 billion a quarter. Sorry, $5 billion a year. So we should see them return to that after they deal with the COVID situations. Cash, we've got 20 billion in cash, but cash is also what they use to pay out everything, so it's not like they're using it for growth or anything. Total assets at 800 billion. Intangible is 10 billion of that, so that's not making it too much of a dent. Liabilities is 720 billion. You don't really look at debt ratio. I mean, I guess you should, but you don't look at them the same way because that's how finance companies and insurance companies operate. high borrow to high lend to high cash. Not going to tell me insider sales. Where are they based out of? They are based out of New York, US, but it's not telling me the insider sales. Interesting. Anyway, let's look at the numbers on Met. Wayne, do you know when the next dividends are for MO? Is it every quarter? And so we still got 2 more months, or are they doing monthly? I should go take a look at MO here. Five minutes until the bell. I'm going to grab some Discord invites in case any of our listeners wants one. Okay. Not seeing much chat from anyone except for our usual guests, our regulars, and I do appreciate you guys coming, you regulars. Don't be afraid to type in the chat if you're new, guys. That's what keeps us fun. Quarterly on MO, so we got a couple months for MO. All right. There's a free Discord chat invite that's good for 30 minutes in case you're listening. We got 6 viewers. 3 of you are regulars. 3 of you I have not gotten a chance to speak with yet. Love for you guys to join our chat room. We share stock tips. We help each other with our trades. It's a great community. And there's other communities that charge $20 a month for Discord access. And I just gave it out to you guys for free. You can thank me by tipping below if we help you make money. I wanted to take a look at MO since we've already done that, and I want to catch it before the bell opens. Really good buying power effect on MO as well. They don't take up much take up much buying power equity for margin accounts. So I'll teach you guys another trick you can only do on margin accounts, and I want you to be very, very careful if you do this. You could take your premium, divide it by your strike to get your monthly ROI of 2.3%. Another way you could count this, I'm not saying you should, I'm just saying you can, is to take your premium, divide it by your buying power effect. I did something wrong there. I'm doing something wrong. But anyway, you compare it to your buying power effect, and that'll give you a much more cash on cash return. Just be very careful if you use that. There we go. I wasn't moving the decimal over. So if I consider this as a trade, as my ROI versus a strike, I'm only getting 2.6%. If I take into my account my margin, my buying power effect, you're basically getting 12.4% because you're getting 4x margin on this. Not saying you should do this, just saying it's another way to think about it. If this confuses you, don't use what I just talked about until you're not confused, basically. It's one of those things, you have to be very, very careful with margin. So I want to do it in that account. Guy says, tomorrow the stock drops 5% and your ROI goes down as the margin goes up. Yep, absolutely. All right, so we were looking at Met. We've only got 1 minute before the bell. We had a couple more stocks to look at as well. Starting to feel a bit tired. MO got filled. Thank you for that one, Mr. Wayne Bicknell. Hopefully that's a winner for both of us. April, let's see, I want to get to May 28th on MET. I guess we can just do it in here. All right. I did not put that in my wheel account, by the way. I put that in a different one because it doesn't touch my 5% goal. So it's not my main wheel account. Just how I keep track of things. Ooh, we got a big ass spread on the Met. So make sure you're calculating near mid instead of at the asking price, or yeah, the bid price. $1.64 on the 62 gives us 2.5% on MetLife. Gives us a break even of 60.36. Compare that to today's trading price of 63.12. Gives us about a 3.5% break even. Not very good on the break even percentage. Have to go further out. But if we got $1 at the 60.50, no, that was wrong. You get a 1.5% ROI, but a better break even. Anyway, guy says, I probably owe you 2. You already owe me 2. Oh, Guy brought up MO? Oh, I'm sorry. Good one, Guy. Guys are our hot picker. Yep, now I owe you another one. By the way, guys, I am feeling tired. I don't know. I mean, jeez. We'll keep going for a little while, but I may or may not cut out early on this one. Trying not to. But this vacation is leaving me a bit tired. Let's go manage some positions and try not to mess it up while tired. Oh, we got a bunch of green today. Everything's in the green. Tesla's up $15. Tesla, by the way, I forgot to say this earlier, has earnings coming out tonight. So good to see some action going for Tesla. I expect Q1 earnings to be up, but I'm a Tesla bull, Elon Musk fanboy. So take that into account. And I do not care. I want to be clear. I do not care at all about the short-term price of Tesla, as long as it doesn't hit my margin call. But other than that, I'm planning on keeping Tesla for at least 5 years. And I'll probably keep some of it for 10 years. After that, and I'll just reevaluate every year after 5 years. So Tesla's doing fantastic. AI is doing good. I'm too tired to figure out all that. All right, in the money, I've got Hillian. I got an 850 call that I sold for 93 cents. It's going to get taken away from me, which is fine. I think I've earned enough premium to break even on Hillian and get my shares taken away and get out of that company would be fine by me. But I've got 11 days to make sure. Today I'm too tired to go figure it out. And also the $850 put is doing fine, so that should expire nicely. INO was a mistake. As a stock tip from a friend, shouldn't have touched that one. That was when I was learning, though. Innodata. I'm bullish on Innodata. I've been holding them long term for a while. I think they've come up. Let's see, check the chart on that one. I think they've come up over the last couple months. Yes, Innodata has made a bit of a comeback and continues to go up. I need to figure out my long-term strategy for Innodata. Rick Phillips asks, what strategy do you use with your Brad Picks account? So, Brad is my friend out of Florida. He was actually my mentor who taught me the wheel account. So those were really, that account was mostly his trade ideas, basically. I've been following him. If you guys want to check it out, go to theoptionsoracle.com. That's theoptionsoracle.com. They have a monthly subscription. And he shares all of his trades that he's been doing since 2009. Definitely worth checking out. Yeah. Although I will be taking over that website as his health has been failing, unfortunately. So anyway. A little bit sad. All right, let's move on. Kodak. Kodak is the mistake that just keeps on going. Kodak was a shotgun arbitrage play I tried to do when it was going up in the pre-market. It wasn't supposed to be in my wheel account, but it's the only account that had trading value in it, buying power in it. So I've just been turning around selling calls on this. I think I've broken even. But I'd be happy to get those shares taken away. Lemonade, whoa, we sold the 55 and the 80. Now it's at 96.88. Holy smokes. Wait, I sold the puts at the 55 and the 80. It's at 97. It was down at 63. Woo! Alright, looks like we're probably going to be able to close these early. Yep, the 30 cents. Wait, oh, this is spread. I'm like, why did I buy a put? I did a spread on this one. So I sold the 80. We're over half value. It's only 3 days old. I should close this. Man, I wish I did multiples on this one. When I get a big move like that, I like to close out half of them or something like that and just free ride the other half. Ah, bummer on Lemonade. I gotta think. I have to think and I'm tired. I don't want to think when I'm tired. I mean, we're getting almost 50% in 3 days of our max. It's not 50% ROI. It's 50% of our max profit. I should close this by all. Yeah, I gotta close it. All right, let's close this out. Let's try and get it down all the way at the cheapest price. All right, if this goes through, we'll lock in about $270. If you followed me on Lemonade, just know that I am now trying to close it. Yeah, guy says, I know, OMG. Yep, I feel that way. That was a stock tip, and I should not have followed it. I've had that for a while. All right, Mac, moving on. That was before I knew better, as they say. All right. Mac's doing fine. Nothing to do on that one. Yeah, Mara's going back up. Let's try and sell, call. I think I'm too tired to figure this one out to open a new position on Mara. I'm going to do that one tomorrow, unfortunately. Let's just try and manage things today. Tilray. We've got 4 days left. We're in the money by 30 cents on Tilray. We've collected 83 cents in premium. So nothing to manage. Just got to let it ride. GRWG. 11 days to go. We've got about 30-ish% of our max profit. So I think we just let them ride. Yep, they're above strike and above break even and all that other great stuff. Nothing to manage on that. Oh, space. Richard Branson, why'd you do that to me? We've got one put that's going to get assigned. Very unlikely that's going to come out. I could roll it forward. I'll look at rolling that forward in 4 days. Both when I'm less tired and when a little bit more decay and a little bit more time has gone by. Anyway, got a $17 put. It's got 25 days left on it. I could close that at half. I should probably do that. I can get half my max value. I've only had it for 5 days. Call it a week. So that's double our weekly. Okay. So for those that might not know or are new or just need to hear it again, I sell mostly monthly premiums. And so one of the things you can do is you think is at your max profit, you're getting 25% a week. It doesn't actually work that way with theta decay, but just imagine it that way, okay? So now we're a week out. We're ending our first week on this stock, and I can close it early for 50% of my max profit. So it's double my weekly normal trajectory, if you will. Excuse me. So I'm going to close this early because if I close this early, not only do I take all the risk and remove it, I still get half of my max profit, but I accelerate my APR, okay? I'm lowering my ROI. I'm only getting half my max ROI, but I'm getting it in 4 times the time or whatever, right? A quarter of the time. So my APR is going to go sky high. What that means is if I invest that money quickly into a similar play, I'll increase my annual return, okay? Hopefully that made sense. Sorry for being tired. If you have any questions on that, just let me know. I'll try and explain it again. But whenever I can basically double my APR is one way to think about it. If I can double my APR by closing early, then I should almost always double my APR and close early. Those $60 space calls probably not going to do me any good. But we got 270 days left on it. It might happen. All right. We already looked at Hillian. We looked at Kodak. Afria. $13 puts. It's at 14 going up. Still out of the money. We're almost halfway, and I can close it for a little bit more than half. Oh, how do I feel about that? I'm long-term bullish on cannabis. Afria is part of Tilray. They're going to merge unless they get blocked for whatever reason, but I doubt that's going to happen. All right, I'm going to let this sit. I've already got a buy to close order in at 17 cents. It's at 23 cents. There's a huge bid-ask spread anyway. It's not going to close at 24 cents. Not going to waste any time looking at that. Plantronics. That one's just doing good. Not enough to close it early, but everything is looking great on that one. Voozy, $25 left, $22 put, $24.53 is the current trade price. Sorry, yeah, the current stock price. Can't close it early. No reason to roll or do anything else yet. Lemonade, we already looked at. We're trying to close early. Apps. We can get a third of our premium after 7 days. We're very far away from the break even. I'm not going to close this early. We'll continue to monitor this one. Yeah, it has a crazy spread. I can't figure it out right now. ARC-G. All right, we've got another one that's over our 50. We're doubling our APR in 12 days. 14 days, that means we're right on track. I don't know if I'll close this one early. And ARC-G is an ETF. I don't feel the need to close this early at all. Okay, so we'll let this one ride. Guy asks, when do you feel like you're over leveraged? When you're puking or losing sleep? I'll try and answer that a little bit more in a sec. But, I mean, Rashid says, that's interesting. So you focus on APR to guide some of your decisions. Absolutely. APR is my way to compare apples to apples. And, yeah, it's what I figured out how to calculate when I should close on ROIs and for timing and stuff like that. Yeah, especially for closing early. APR is such a useful thing to have. You need APR when you're comparing stocks to stocks with different expiration dates, or even the same stock with different expiration dates. Which one do you sell, and which one's the better deal? You need to calculate APR, and I found that APR is super useful when figuring out when to close early. Because if you're not using APR, it's really hard to figure it out. I think you're just gut going off of gut work. Guy asks, when do you decide you are over leveraged? I'll tell you what, I think that's one of my big weaknesses. I opened up all my accounts as margin accounts, and I've never had a margin call, knock on wood. I have gotten close, but that's a weird situation. Well, it's not weird. The reason I got close on that one is because as Tesla kept going up, I kept having more and more buying power, so I kept buying more and more stocks of Tesla and other things in that trading account. And then when Tesla came crashing down, it actually got close to the margin call, and I had to sit there and calculate if I should sell some shares right away, how many shares would I need to sell, or if it got margin called, how much would I need to do? Yeah, in March, yeah. And so that forced me to go out and learn some more about how to calculate where you get margin called with margin equity. It's a lot trickier, and they kind of bury it. This is on Schwab, by the way. You have to go, not only can you not do it in the platform, which I thought was weird, you have to do it on the website, and you have to look at 3 different screens, and you have to click through all 3 of those to get all the different numbers you need to calculate how far a share would drop before you'd get hit with a margin call. Because that's the super freaking annoying thing for all you guys listening in. Every stock has a different margin rate, has a different margin equity, and then they all sort of calculate it together, and then it goes into your account, and some stocks, especially if they're over OTC, won't even count versus your margin. So it's a lot more complicated than it should be on when you would get hit with a margin call. So you know, you'd like to be able to just go, oh, if I think this stock is going to drop 20%, then if I'm going to get margin called at 10 or 30%, maybe I should sell some now or whatever. But you can't even make that decision because it goes by Every individual stock has a different weight for your margin, but then it's your whole account that gets margin called. It's so weird. And what was the other thing I was going to say about that? I forget. But anyway, so I'm not the strongest. I haven't figured out the right leverage ratio on margin. Oh, the other thing I was going to say, which is crazy to me. They can change the margin requirement on stocks over the weekend, or what seems like a very short amount of time. I think you can get a notice on Friday that they're going to change the equity requirements on Monday. And this can cause the price to shoot down, because if they had a margin of 50% and then they say now they're only going to give 40%, then people have to start selling to make sure they don't get margin called, which causes it to go down in price, which causes people who didn't see the notice to get margin called. It's crazy. It is a scam. It is very, very dangerous to play with margin. If you're new, I do recommend not touching margin until you really understand it. Excuse me. So to answer your question, Guy, I am not the one to ask about that yet. I'm trying to go back down on all my levels on margin. And I haven't figured it out. All right, so he's looking at ON, Semiconductor Corp. Applied volatilities in the 50 range, 50, 40, 60%. So we're looking at this. All right, ON, you can get 210 at the 43 at the money. That's 4.8%, so you won't get 5% at the money like I would like to. Bid-ask spreads are not very, I consider them low. They're about 15 cents apart. That's low compared to some of the stuff I trade. If we come down to $1, we'll get $1 at the 40.50. Still not much break even. Let's take our current price, 43. Let's times it by 0.85 to see what a 15% discount looks like. 36.55. Oh, to get there, you'd have to be at the 37 selling for quarter. Then our bid-ask range gets crazy. Let's take a look at this. About 32 days out. If we got 75 cents at 37, that'd give us a nice break even. 0.75 on 37 would be a 2% return. So still not great, and you might not get it because it's at the mid of the bid-ask. So not looking like a wheel contender for me right now. I'm sure a guy has another play to put on it and not using the wheel. Okay, Wayne says, I bought 100 UNM and sold the 521 $30 call. Goes dividend X this week. Already have a 521.25 coverage short put sitting at 29.08 now. Sitting at, okay, so the price went up. Okay. Nice. Good job, Wayne. Those looking like some sexy trades. I might not be following you guys because I'm so on these trades because I'm so tired tonight. Only got 7 more minutes till I'm off the air. And I do appreciate you guys tuning in and hanging out with me. It's a lot of fun. It's more fun to make money. And I do want you guys to get rich. I want us all to get rich together. You guys could come hang out with me in Bali, and we'll do some shrooms on Gilly Tea. And enjoy the good life. Live free. So what did he do? Okay. He bought 100 NM and then sold the $30 call. Sold the $30 call. The 521. Yep. Getting 60 cents on the call. Buying the shares for $29 a piece now. 0.60 divided by 29. So you're getting 2% on the call, plus then you get the dividends on UNM. You know, I never look on Tastyworks where the dividends are and how much. So I actually have no idea. I have to switch over to the other websites. Isn't it funny how you have all these tools, but you get used to using them somewhere else? So you end up with all these different websites and stuff open. That's crazy, Wayne, that you've never been to Bali, but you've been to Philippines, Malaysia, and Singapore. Philippines is great. Not the best food in the world. That's an understatement. People love Singapore. It's just a big city. I'm not a big city guy. Malaysia is also, Kuala Lumpur is a big city, but I love the food in Malaysia. I love the cheap Indian food. You spend less than $5 for the biggest plate of Indian food I've ever had. The only problem is all the Indian restaurants taste exactly the same. It's the exact same recipes for all of their dishes. There's no variety to the Indian food in Malaysia that I could find. But I really love KL. KL also has a really good board game community. I love playing board games. They've got tons of board game cafes. I made a lot of friends there. Just posting on Facebook board game groups and hanging out with people. Rick Phillips says you can put a dividend indicator on your Tastyworks watch list. Interesting. I'll have to figure that out when I'm less tired. All right. Dividends May 4th. We're looking at 1% based on the current price. So you'd get 2% selling the call, 1% on the dividends. And then you'd own shares in Unum Group. And if you kept the shares, it'd be a 3% discount. UNM ad at the bottom. AD at the bottom. Where am I looking? Oh, there's this ad down here. That's an article. That's news. No worries, man. All right, guys, we got 3 more minutes. I'm so tired. I don't think I'm going to put on any great play or any more plays myself, but I do think it's great that you guys are making some good plays. You guys are getting some triple income strategies going on Unum and other things. On MO, I thought MO was a good trade. We did that one together, and it got filled right away. That's always good. We managed a few trades today. If you followed me and opened up Lemonade, I am closing my Lemonade early. It hasn't filled yet. If it doesn't fill, that's okay. We're in a really good position. We looked at a few other positions. I think most of them were just riding. Yep. Cool. And thank you guys for being a part of the Fox with Stocks network and community. Thanks for watching this channel. You can keep the conversation going if you join our Discord. I posted the link up before. Let me post the link again. It's got a few more minutes that it should be working if you're tuning in. Okay, I don't know how many more minutes this has got. It's only maybe got 5 more minutes. You're free to click on that link. But you can keep this conversation going. Just because I go off the air doesn't mean that you have to. Wayne has some really good ideas and tips and knowledge. Guy has really good stuff, but he refuses to join us on Discord. And it's just a great community, man. You guys want to be a part of a community. There's no reason for you to trade alone, even though this is an individual sport like boxing. You know, every boxer has a coach and has other people to train with, that helps him get better. So don't go through life trading and risking money and investing thinking that it's an individual sport. It's not, guys. You guys want to team up and be a part of a team, be a part of a community. You know, these stocks that you guys brought up today, this MO and UNM and stuff, these would never hit my scanner. I would never look at these stocks because they're not going to generate 5% in a month. but they're good strategies. And if you look at especially the buying power on some of these, if you calculate the ROI versus the buying power, you're getting a really good return. And that's something that I might want to look more into in the future. I'm not asking for me to be your coach, guy. I'm just saying, oh yeah, maybe you're commenting, yeah. But people need a coach, right? Maybe guys just saying, yeah, he has a coach, we should all get coaches. Exactly. And that's part of the reason why Guy is finding great deals as well. And he has a unique perspective on it. You know, he's got somebody to help teach him. But maybe Guy wants to coach some other people. You know, you learn when you teach as well, because people ask crazy questions or just a point of view that you're not used to thinking about. But anyway, guys, thank you guys for sticking with this. As always, this is the Fox with Stocks Network. We appreciate you helping and being a part of this. If you make some money with us, guy says, I'm a day trader. That's awesome, man. Are you a prop trader? Are you part of a prop firm? I'm taking a test tomorrow so I can start being part of a prop firm. I'd like to know what prop firm you're in if you're in a prop firm. Anyway, if you guys make money off this, do consider tipping. But more importantly, if you enjoyed this, make sure you share it with your friends and family. YouTube doesn't give us much exposure. There's not much discoverability on YouTube. It really depends on you guys sharing it with your friends and family, getting them interested in investing and saying, hey, this is a great channel. Check it out. Guy, let me know what prop firm you're working for. Send me a referral link. I'll apply for your prop firm. Well, hopefully I'll see you guys on Monday morning. Signing out. Have a good one, guys.